Hey, what's good, YouTube? Welcome back to the channel. Welcome back to the Brown Gent. And today we're going to talk about Tesla and other electric vehicle stocks. So before we get started today, if you can hit the like button on the video, this really helps me with the YouTube algorithm. And if you like the content that you end up seeing, make sure that you hit that subscribe button. That tells YouTube that you want to see more of my content. And don't forget, anything that I say in this video is not financial advice. So do your own research and do your own due diligence. All right. So one of the things I sort of want to discuss is EV is no longer that nice, shiny object that everyone's talking about. Right now, it's all about AI with ChatGPT and Midjourney. A couple years ago, it was electric vehicles, and before that, it was MJ. Every single few years, you have like a two-letter acronym that seems to take the world by storm. Now, that doesn't mean that EVs aren't important, and in fact, depending on where you live, you have started to see more of a movement toward EVs because of, these ever-changing policies around the environment, right? Whether or not EVs will make a significant impact and have a significant footprint change is still to be determined. I've seen arguments on both sides sort of talking about the drainage of sort of the electrical grid, which could technically be an issue for the long term. But I also understand the feasibility of not using gas-powered vehicles, right? They're a drain on their ecosystem too. So today, I am going to cover 4 stocks. And when I say cover, I'm really going to kind of brush the surface on many, really focusing here on Tesla, because Tesla is a big investment for me. At the moment, I own 110 shares of Tesla. I've sold a bunch of Tesla shares over the last few months, probably the last month and a half, probably for the last 2 months. I have 90 long shares in Tesla. These are shares I plan on keeping for the long term, hence the name long. And then I have 20 swing shares, which as the price of Tesla keeps going up, I sell them by pieces. Today I sold 5 shares at $290. So we'll start with Tesla. And Tesla is very famous because of Elon Musk. And Elon Musk is one of those guys who's very unique. You might know him from Dogecoin. You might know him from PayPal. You might know him from Twitter even. But he is the driving force behind Tesla. And in fact, it was him being involved in the acquisition of Twitter that brought the value of Tesla down so much. Really 2 reasons. Number 1, he didn't have the liquidity. Billionaires like Elon Musk, they don't sell their shares because if they did, they'd have a significant taxable event. What they do instead is they hold their net worth in their stock options, in their shares, and that way they have a huge P&L, a huge sort of unrealized gains that they don't have to access. And then they can use the company to sort of fund their lifestyle, right? So when he bought Twitter and he had to fork up $44 billion worth of cash, where do you think everyone thought that this cash would come from, right? Everyone knew it would come from Tesla, because the reality is he has to sell Tesla shares in order to get that money. So that's number 1. He was going to sell his Tesla shares. Number 2, you heard the board of directors from Tesla and others just started talking about, like, he never spent time in the office, was never around, and all of a sudden they just expect him to sort of like do both. They sort of understood that, hey, his focus isn't on Tesla. You had a few of his biggest investors, especially in the institutions, complain a lot, saying that they should be part of the board of directors so they could right the ship. People were worried that with his sort of focus on his new toy in Twitter, that he wouldn't be spending the amount of time Tesla needed. So all of these things came to fruition. And, as you, probably if you sort of paid attention, there was tons of drama, right? Everyone on Twitter was talking about this. ironically about the Twitter acquisition, sort of trying to paint Elon in a bad light, whether or not sort of, you believe in what he said or not. But this had a huge impact on the price of Tesla. So let's go to the super charts on TradingView, and I'll show you what happened. So let's just go here. It's like a V almost. So Tesla was sitting here in October. This is where around $300 a share. Let's not forget that Tesla has had a huge run up over the last couple of years, right? During the pandemic, they had 2 stock splits, and the Tesla shares had appreciated significantly, right? These shares should be at least 12 times higher. I think they did a 4-to-1 stock split and a 3-to-1 stock split. But you can see here, the shares of Tesla did fantastic. Let's just sort of zoom out over here, and you can see how great Tesla's been doing, right? Very, very good. But all of a sudden, when there was this Twitter drama and everyone expected Elon to be selling, and let's not kid ourselves, a lot of this red here from October all the way to January was retail and Tesla selling shares, and institutions really. There's a lot of sell pressure on here, bringing Tesla down to $100. And I remember back then talking to my friends about this every day. I'm like, hey, I think it was below 200, every single day I was just buying Tesla shares. At one point around $150, one of my buddies, Phil, was asking me, hey, do we keep buying? And I'm like, let's give it a few days to see how the earnings turns out. Earnings was terrible. They talked about a super factory and sort of delays there. Tesla kept going down. At some point it became just so good, right? I was buying between 190 and 150 and then below $130. So I ended up with a significant portion of Tesla shares. I didn't really have that many prior to all this. I had sold a ton of them, right? But at $100, $110, 120, what a fantastic deal. These are life-changing opportunities. So I bought a bunch of Tesla, and I bought maybe 180 or 190 shares. And then I've been selling the swing shares this entire run up. So we went to 200. I had sold a bunch. I bought a bit back actually around 160, 170. And then I've been selling all the way up here, most recently selling 5 shares today at 290. Now, you're probably wondering, why am I still holding the Tesla shares? It's sort of done a huge run up, right? Well, I believe in the long term of Tesla because they are not just an EV company. Let's not forget, Tesla has huge visions around robotics, autonomous driving, ride sharing, insurance, and then EVs, right? So robotics, I think you've seen some of the articles around what Elon Musk plans on doing, creating like a 5'6" or a 5'7" robot that's sort of slower and weaker than human beings that will sort of be like our butlers or servants of sorts. We have autonomous driving, which is going to be fantastic. It's part of Tesla already, where you can have the car drive itself through automation, through a bunch of technology, which I really don't understand how it works. We have the electric vehicle component, which we obviously understand. We have insurance. Now, I think insurance is fantastic because you're driving Tesla, you're actually able to get the most precise quote based on your driving habits. And I think doing that will really save a ton of money through the arbitrage process. And finally, ride sharing. Imagine a world where instead of going for a parking spot, you get your car to drop you off at work, and then it drives off and makes you money the rest of the day. It just drives it like you have no one in the car, right? Autonomous driving is already set up at that point. You're just picking people up, dropping them off at their location, and it just keeps doing it. So we turn what was initially a negative, right? Which is a car requiring a parking spot. If you imagine a city like Toronto, a city like New York, significant costs. However, instead, let's say you choose to have this ride sharing option, maybe Tesla takes 20, 30% or something, you're still making money, and then you go get it charged, right? So that's the only thing that they've got to sort of sort out. How do you get this car charged during all that going on? But this is fantastic, and this is an amazing long-term vision for Tesla. And right now, we are just paying for one of those 5 pillars. And that's why for me, I'm not selling any of my longs on Tesla. In fact, if it keeps going down, perfect. I'll load up more swing shares, and maybe I'll load up another 10 more longs so I can sell covered calls. I don't really believe in selling covered calls on Tesla because I don't want to exercise. I don't want to lose my shares. I think Tesla's fantastic. If we go over here, there was some recent news around their packages, or they have bonus structures. So there was a technical lawsuit where, the team is now just being forced to return, or they're not forced, but they're choosing to return $735 million of stock awards. And that's going to sort of end the lawsuit over pay packages, right? A pension fund was accusing the directors of grossly overpaying themselves, right? And obviously Elon Musk is one of those directors. He doesn't need enough. He doesn't need more money. He's like the richest man in the world. Also, Doug says poker. I'm going to assume he's referring to how they made their money. Yeah, I mean, that's what Dan Bilzerian would have you believe, right? And Tesla skeptics push back after a sizzling $500 billion rally. I think this was published a few days ago. Right on cue, Tesla Inc. skeptics are pushing back after a $5 billion rally. And you know what? Decidedly so, right? There's tons of competition. Tesla is the leader in the space, but you know what? There's a ton of demand, and there has to be more competition. There's Coke and Pepsi, right? There is, and by the way, Doug, I'm actually watching it on another screen, so you can't see it here, but I have a second screen where I'm watching Adam Wilton and Jones and stuff play it out, and Weinman. Weinman is my, for those of you wondering, World Series of Poker final table is today. Weinman is my horse. I hope he wins. There's just so much equity there. He's a really nice guy too. Always smiling. And after he sucked out with that Jack's hand versus Queens and Kings, monster hand. I would love to see him win it. So basically, if you think back to any sort of industry, right? Like you have like Coke and you have Pepsi, you have hundreds of other beverages in that category, but you don't know of them. You may know of RC Cola, you may know of these small rinky-dink brands, but the reality is you have the sort of category leader. And Tesla is the category leader, right? I think that, some people just don't like Elon Musk, right? Because of his views and because he's very erratic. But I can't think of anyone better, right? The people you want in charge of a company are the ones who are inspirational. They're usually not very normal, right? Musk is just such an unpredictable person that I would count it among one of the top risks for Tesla. Matthew Tuttle, CEO of Tuttle Capital Management. Yeah, well, you know what? This guy's very vain, right? Calling his company name after his last name. So whatever. As Tesla's profit margins shrink, 67% of participants said the billionaire executives should focus more on the car maker. Their warning comes in the wake of a seemingly improbable 128% rally for the shares this year, which fueled by renewed investor appetite for tech megacaps and Musk's prediction that the era of fully autonomous vehicles is nigh. What I'm going to say here, and by the way, never believe this. This is something I have been preaching from the get-go. The media and the people who write these articles do not want you to succeed. Most of their funding comes from these institutions that are thriving off taking your money. So when things are going down, they're like, oh my God, it's going to zero. When things are going up, oh, it's going to the moon, right? They'll never tell you that the most important lesson that I ever learned when investing is don't just act on emotion. Sit there and ask yourself, has the fundamentals changed in what I'm buying? If the answer is yes, okay, then maybe don't buy. Otherwise, you just get these incredible buying opportunities. If I sat there and listened to the media, which told me that Tesla was going to go bankrupt back in November and December, I wouldn't have been able to pick up Tesla at $110, $120, $130 per share. In fact, I would have sold the remaining shares I had. So listening to them would have made me lose money. And then now that Tesla's up, they're like, oh, Tesla, it's going to be amazing. It's going to do fantastic, whatever. These guys don't want you to win. please take that as your, if you take nothing else away from this video, take that away. Just realize this is a rigged game where the media is trying to get you to do the opposite of what you should do, right? Now, I'm not saying you should buy, right? What I'm saying is ask yourself, this is a great buying opportunity. Do I want to buy? At the same time, when things are at all-time highs, madly euphoric, and media is saying things are going to go to the moon, that's when I get scared and I go, hey, you know what? I'm going to take some profit off the table, sell some. So like, let's say, okay, let's just use an example. You have 100 shares of Tesla, okay? You strongly believe in the company. What's wrong with trimming 10% of your position at like the high? Then if the stock keeps going up, you keep holding, you're doing fantastic. If the stock goes down, you can buy back those 10 shares. This is what I do. And that's why I have a long position and a swing position. Anyways, so I strongly believe in Tesla and I'm super pumped by it. NIO is sort of the next stock I want to cover. NIO is a darling coming out of China. And for those of you who watch this channel or you're on stock YouTube or YouTube stocks, you'll know that NIO went from like $2 in 2020. Where is it? $2-3 back in 2020, all the way to highs of like $62 right before NIO Day of 2021. And ever since then, it's been on the slide, right? It's kind of come down just like the rest of the market. And, you know, this is a stock that I expect to see a recovery in a somewhat decent time frame. In fact, you know, what we see here is NIO's top owners are retail investors. You know, 50% of the owners are actually the general public. Let's not forget that NIO is what's called an ADR, which is a receipt that you can get for owning a Chinese company. So you don't technically own shares in the company. You have a receipt that's redeemable for a share. And that's with a holding company that sort of sells the shares to us. It's kind of weird how it works, but you should know that. Basically, 50% stake retail investors possess the maximum shares in the company, the group that stands to gain the most from their investment into the company, right? Insiders still have 33%, and then owners, or, you know, kind of the insiders own a large chunk of younger, smaller companies, while huge companies tend to have institutions as shareholders, right? So what does that actually tell us about NIO? Well, many institutions measure their performance against an index that approximates the total or local market. So they pay more attention to companies that are included in major indices. NIO already has institutions on the share registry. They own a respectable stake in the company. They can indicate that the company has a certain degree of credibility in the investment community. However, it is best to be wary of relying on the supposed validation that comes with institutional investors, because they can also get it wrong. If multiple institutions change their view on a stock at the same time, you could see the share price drop fast. Also, you could see the share price increase fast. You'll see a price upgrade sort of result in a ton of companies also doing the same price upgrade and sort of people buying into the shares. I don't sort of pay attention to those either, because you'll see, like, let's say NIO's at $40, it goes to 30. That morning, oh my God, it went to $30. Our new share target is $28, right? They're just very reactive. They look at the price and they go, oh, I want to be close to it, so I'm just going to keep changing my predictions to be in line with very close to the share price. It's not really like real measurement. Looking at NIO as well, what was fantastic was back in March, they actually beat their EPS, so 13.43. They had some pretty bad earnings losses or, you know, misses previously. So hopefully we will see that again in the next earnings update, right? So it was June 22 minus 10, September 22 minus 13, December 22 minus 91, and this March, so like 3 months ago for Q1, EPS beat by 13.43. Very interested to see how Q2 turned out. You know, very, very interested. We'll see the June 2023 numbers that are coming out soon. The next stock I want to talk about is ChargePoint. Now, ChargePoint is a stock that you probably see all over the place. It's the leader in EV charging companies, and in 2021, it was my most profitable investment, making me over 5 figures. And the reason I say that is you would be able to predictably, and it's hard to see now, but it would just jump from 20 to 30 every so often. I just kept doing it, and there was a long period of time where it would just yo-yo, and I would just map out the levels, and let's see if I still have them on TradingView. I should. Let's go to the super charts. Yeah, so you see the levels over here, and if we go back here, the sort of ChargePoint charts, every time the stock would sort of take a step up, I would, not here, back over here, so here, yeah. Every time the stock would sort of take a step up, I would sort of sell, and every time it would take a step down, I would buy. So over here was like fantastic. I don't have the chart lines anymore. I don't know why, but it's a very, very profitable company for me. And also, once again, I always look at it from a category perspective. Now, we know Tesla will be joining the charging sort of space. They have their own superchargers, and they're looking at opening that up to other EV companies, so they don't have to have their own sort of charging infrastructure. ChargePoint is sort of the most built infrastructure within the US, I think also Canada and sort of North America, and they're also expanded to Europe. But ChargePoint, in my opinion, is the leader in the space, and that's why it makes up a significant part of my EV portfolio. If I could only have two EV companies, it would be Tesla for the cars and vehicles, I guess, and ChargePoint for the charging companies. There is also a few other charging companies like EVgo and Blink. Blink is way too small. In my opinion, EVgo is not very good. I mean, if you want some extra exposure, you could do that. This is sort of like another SPAC that's sort of just done poorly, right? Like, it's really like down to $4. It's 1.3 billion market cap versus a 3.06 billion market cap for ChargePoint. Now, while ChargePoint has been like waffling a little bit in the last little while, I have been adding to it around $7 to $8. And, I think recently we were over $9 actually. Why is that not here? Yeah, we were over $9. So I sold some swing shares, but, I have, once again, long-term position and swing position. So yeah, that's sort of it here. And you can see here that ChargePoint has been doing fantastic with their earnings, right? They've gone 12% in July 22, 10% in October 22, 15% in Jan 23, and 11% in April 23. Want to keep seeing those earnings beats. These are good numbers because every single time the target will technically increase. Okay. So there is one thing I do want to flag here though. So there was a news article, and once again, like I said, you got to take these with a grain of salt, but there is always something to be said when ChargePoint's holders are disposing stocks, right? So that's a potential bear signal. And we've seen that, right? Over the last year, insiders sold a significant stake in the company. And that definitely makes investors confused because, like, if it's a good company, why are they selling it, right? Knowing whether insiders are buying is usually more helpful when evaluating insider transactions, as insider selling can have various explanations. But if you're seeing a ton of it over a specific time period, it can definitely be a red flag, right? Now, I'm not going to go through sort of all of this here, but just you should know that insiders ditched about $500,000 worth of shares in the last 3 months, right? Without purchasing any shares. Okay. Finally, I got asked about this stock yesterday, Nikola Corporation. Now, I have very strong feelings toward Nikola. Nikola is a company that was around $60 to $70 in its heyday. Then they got in a lot of trouble because they had a sort of audit where they found that they were recording fake transactions as company sales. So what would happen was they would record it very like Enron-esque. Oh, we sold X amount of vehicles, added revenue to it that didn't exist, and then they would put them in parking garages and sort of, we sort of hit it, right? A short report came out, sort of flushed all this out, and there was a lot of legitimacy towards it. And as such, the stock just completely cratered. I mean, how else can you lose investor confidence in the company, the CEO? And since then, it's gone from like $66 all the way down to like 50 cents, right? Back like a month ago. Now, people are asking about this company because over the last couple of days, it's gone up 60%. But this is not a company that I would tell you to invest in. Why? Number one, is a lot of negative perceptions, right? You hear the term Nikola. I don't remember much about a lot of these companies, but I remember Nikola because it was a very emotional company where like people were very upset. So it riles up people. Number two, there are tons of people bag holding this stock, right? So you have a stock that no one has got, like pretty much everyone's underwater on, right? If you bought it anywhere above, anywhere above $5 even, you're down super bad, right? And at some point, people say, oh, it's gonna stop, right? Over the last year, even when it went to $8, oh, it'll stop going down, but it never did. It just keeps going down, keeps going down, keeps going down, right? And at 56 cents, it started going up. Well, the reality is that this is not a company that has a lot of long-term potential because, or at least they have so much headwinds. If the stock price goes up significantly, you're going to see significant sell pressure from people who are like, fantastic, I can finally dump this investment. This is why I don't like typically buying stocks that really don't have a plan of recovery and are just hoping on a sort of meme rally to sort of help them out, right? And there's an article that came out a couple of days ago on the Friday. Nikola stock rallies again. We have no idea where it's going, right? So shares of electric heavy-duty truck maker Nikola have more than doubled in just a few days. What's going on and can it last, right? So on Thursday, the shares went up 60%. Then they were up 20% in early trading Friday when the S&P and the Dow Jones opened higher. Good news on Thursday started the rally. They announced a 50 truck sale to hydrogen producer Biotech, a producer of hydrogen gas. I would love to see a confirmation that this actually happened, given what happened last time. Can you imagine? They're like, hey, people probably forgot we were doing this. Let's go, park these trucks in random places. Instead of garages, let's go to the farm country, just put them in random places so people won't know we're doing it, right? So because of all the good news, typically what happens, and this is sort of why the rallies happened, you have people shorting the stock, right? So when you're buying stocks, you can either go long or you can go short. Going long means you buy the stock because you believe it'll go up long term. That's what a long bet is, right? So you buy the stock. If you go short on a stock, you're betting the stock will go down in the short term, right? It's called going short. You probably heard a lot about this in the Big Short or, the AMC and GameStop sort of fiasco from a couple of years ago, right? So if you're short on a company, you basically sell the stock today and you owe the stock in the future and you pay a sort of interest to sort of borrow that capital. But as the stock price goes up, the interest goes up, right? Because instead of now borrowing like at $3 a share, you're now borrowing at $20 a share potentially. And as the price goes up, people will just say, hey, you know what? Instead of continuing to pay this interest, I'm going to get out at a big loss or cut my losses, cover by buying the share back from the market. And what that does is it puts even more pressure up to get the stocks going up. This is what a short squeeze is. So typically when you see short covering as a result of good news, you'll see a mini short squeeze. And that's what we're seeing here. Does that mean I think that Nikola is a company that you should sort of continue to buy? I don't think so. I think that you should really be focused on companies like ChargePoint, companies like Tesla, even companies like NIO. NIO is like to a smaller extent because it's very focused in a specific region. But I really think that, one of my goals with this channel is really to get you to be very careful with the number of speculative stocks you put in your portfolio. Remember, I'm not your financial advisor, so I can't tell you what to do. But one of my guidance to myself is do not hold too many speculative stocks. My speculative stocks, as I keep telling you guys, Zomedica, Nano Dimensions, and Mara, right? And if you look at how those stocks are doing, Zomedica has sort of been flat. Mara has just been taking off, right? Like let's look at Mara. Today was not a good day for Mara, but it wasn't a really good day for crypto. But over the last few months, like over here, you just see 969 all the way up to what is it, like $18, almost 20, right? Like fantastic growth. Let's just go the last 5 days. Yeah, 1930. This is doing fantastic. That's what you want to see from a speculative stock. It just makes up so much more. And then my old faithfuls like Tesla, which also are up over 100%. They are the ones who are supposed to be the backbone of my portfolio. Anyways, that's pretty much all I want to cover in today's video. I just want to thank you all for tuning in. I understand this is not an ideal time to do the live stream. So for those of you who watch right now or watching later, please hit the like button, hit subscribe, share this video with people that you know. And until next time, I'll see you in the next video.